Thank you everyone for joining us today. We are going to go ahead and do a poll question while we're waiting for the event to begin. We want to hear from you. Why are you here? What do you want to learn? So you'll see a poll question pop up for you there in the WebEx. And can you answer, what do you want to learn? Who is Generation Z? How do younger consumers want to pay? Or how other executives are responding to younger consumers' demands? Go ahead and put your answer in there, and that will help us tailor today's session to your specific needs. Now, you might be thinking to yourself, I want to learn something else that's not listed on here. Go ahead and put that in the chat feature, and we'll see if we can address that topic as well. Because our goal for today is for you to have fun and to learn a few things about the younger generation and how you can better serve them to reduce late payments and reduce calls. All right, we're just doing a quick poll as people are joining us today. We haven't started yet, just a pre-webinar poll and looking to figure out what are your top priorities for learning today. And it looks like it's really around how do younger consumers want to pay at 67%. And then at 31%, how are other executives responding to younger consumers' demands? And so we will cover both of those topics with some new research for you today. So welcome to today's event, how and why younger consumers pay late 53% of the time. So this is no doubt a big challenge for organizations. Younger consumers are an increasingly large demographic here in the United States, and they're paying late and they're calling you more. So we're going to find out what's the hope for raising the profitability of serving the younger generation of consumers. Good afternoon and good morning. Thank you for taking the time to join us today. My name is Phil with ACI Worldwide, and I'll be your moderator. Just a couple of housekeeping items before we get started. We put all of your phone lines on mute to prevent background noise, so if you have a question, just go ahead and put that in the Q&A box in WebEx in the bottom right. You can submit questions at any point in time during today's webinar, and we're going to have Marc and Eric address your questions at the end. We'll also give you several poll questions during today's webinar. You can give us your perspective by answering those polls, and at the very end of the call, you'll get a survey. Please take a few moments to give us your feedback. Of course, we are going to record today's call and share a recording of the call with you afterwards. So without further ado, what is today's agenda? First of all, who are younger consumers? Then what are the challenges of serving them? How do they want to pay? And what are other executives doing in response to the demands of younger consumers? I'm very grateful that today we have Eric Jenkins, the Chief Deposit Service Officer of Georgia United Credit Union, speaking with us. In this role, he's responsible for all the operations of the credit union. Previously, Eric served in executive roles at CU PartnerLink, GCUA, and Palmetto Health Credit Union. Personally, this has been a big transition year for Eric. His daughter graduated from undergrad back in December, and his son is graduating from high school this May, so he's about to become an empty nester. Our second panelist is Marc Sczesnak. Marc is the Director of Product Management at ACI Worldwide. He's held several leadership roles in the financial services industry, including Chase, Citi, U.S. Bank, and retailers like Sears and Macy. In terms of personally, Marc had made his last tuition payment back in January as his daughter is about to graduate. So you'll see that today's panelists have a lot of experience with the younger generation, not only professionally, but also in their own families. And a very important part of today's conversation is you. We want to hear from you with comments, with questions, and by filling out the polls throughout our conversation today. So our first topic, who are younger consumers? And with this, we're going to turn it over to Marc Sczesnak. And Marc, get us started. How old is Generation Z?
Hi, Phil. Good afternoon, everyone. How old is Generation Z? Good question. Gen Z are people from the age of 4 to the age of 24. So these are children and also young adults, teenagers, those in college and just exiting college. We also, the next generation, Gen Y, are those 25 to 40 years of age. Gen X, 41 to 54. Then you have the baby boomers, 55 to 64, and then you have your seniors at 65 plus.
Yeah, thank you very much, Mark. And so clearly, the 4-year-old members of Generation Z aren't doing a whole lot of spending, but the 24-year-old members certainly are. Can you tell us a little bit about the spending that's going on in the younger generation?
Yes, the research that we've recently conducted along with the Aite group and with Visa indicates that the younger consumers represent a $143 billion group in terms of their spending power. And they're spending this on auto finance, insurance, healthcare, utility, higher education payments, government, and yes, some of them are even starting to get into mortgages.
So really it looks like it's widespread across industries. So this brings us to our next audience poll. Who is the largest generation? You can go ahead and put your answer on the right-hand side of your WebEx screen. Is it Gen Z, Gen Y, Gen X, baby boomers, or seniors? Go ahead and give us your perspective on who is the largest generation. I'll give you a hint. It's changed a lot recently. There have been several generational shifts as older generations are dying and younger generations are becoming larger and larger. So the question, who is the largest generation? And while we're waiting for those poll results to come through, I'm going to go ahead and get us to a question that we have with Eric. So Eric, what has Georgia United Credit Union learned about serving younger consumers?
Eric, you have to click that mute icon in the by your name and come off mute. There you go. Oh, no. You're still on mute. There you go.
Phil, I'm good. I'm not. Can you hear me?
Yes. Yeah. Thank you, Eric. Sorry about that audio. Yeah. So, Eric, what has your credit union learned about younger consumers?
Yeah. Good afternoon, Phil, and thanks for the opportunity to participate on the panel and for the attendees taking time out of their day. Young consumers, what we've learned first and foremost, they want to complete their financial transactions in real time. And what I mean by real time is they don't want to have to schedule payments for the future. They definitely don't want to mail checks in or visit a physical location. They even find a lot of what we would think of as easier electronic payments like ACH origination. They find setting those up to be cumbersome. So they want to make the payment when you as a financial institution are reaching out to them and letting them know a payment is due. It's not easy to capture their attention. So when you do capture their attention, you need to provide a tool at that moment so they can go ahead and act on the request that's being made. And so it's this desire to complete financial transactions in real time that we find drives their financial decision making.
And Eric, that absolutely lines up with the research that we've seen, that real demand for real time among the younger consumers. Well, we do have our poll results in, so the audience voted in terms of who is the largest generation. The votes were baby boomers had the largest votes, and they were the largest generation, say, 5-10 years ago. Then Gen Y had the second most number of votes, and that was true until this year. But now things have shifted, and Gen Z is actually the largest generation. So I actually made a mistake and put the slide up too early, showing the actual results, but still only 9% of the audience voted. But the actual correct answer is Gen Z, the largest generation now. So we see things are changing faster and faster, that we have to adapt in order to serve younger consumers. And just like Eric said, they're looking for things in real time. So let's move on to look at the key question of what are some of the other challenges of serving younger consumers. And with this, I'd like to turn it over to Marc to share some of the research.
Okay, thanks, Phil. Again, ACI partnered with the Aite group along with Visa and had commissioned this survey on Gen Z. And to the extent that you're interested in receiving a copy of the full survey, you can contact us at the end of this presentation, and we'll make sure that we can send that out your way. But again, the Gen Z folks are confused in the sense that They don't necessarily understand the billing process and how to do it relative to Americans on average. 30% of the Gen Z folks find bills confusing, where 22% of average Americans of all ages find it confusing. I think part of this just might be a training issue where they're just coming into their own. Maybe their mom and dad have handled a lot of these things for them in the past, and now they're starting to have to take this on themselves. And so they find the act of reading and paying bills a bit confusing. They're also very anxious. People of all ages are anxious to get bills, but Gen Zs are the most anxious. And on hold. Phil had alluded earlier that the Gen Zs have a tendency to contact the companies with questions about their bill or account at a higher rate than Americans of all ages. 81% of Gen Z will contact the company with a question, where Americans of all ages, that will only be 73%.
You know, Mark, that's really counterintuitive too. You know, we tend to think that our younger consumers don't want to call on the phone, but we see that as well. They will call in if things aren't happening the way they think they should or as quick as they think they should.
Yes. They also have a tendency to be a little bit more forgetful. You know, sometimes people forget to pay their bills. Gen Z has a tendency to do that more frequently than the other generations. Maybe it's because they have a lot more on their plate. There's multitasking that they're doing. Again, they're not in the routine like older people are, in the sense that they know there's a cycle that happens every month regarding certain bills that need to be paid and scheduling them. They just have a tendency to forget to pay their bills more so than the other generations. They also have a tendency to pay later at a higher rate. 53% of Gen Z folks paid a bill late in the last 12 months, versus 46% is the average of late payees for Americans of all ages.
Thank you very much, Mark. And so we see that Gen Z is confused, they're anxious, they're on hold, and they're late making payments. So that brings us to our audience poll. What's the average attention span for Gen Z? Is it 8 minutes, 1 minute, or 8 seconds? In the WebEx screen, you can see on the right where you can make your vote. And now remember, as you're voting, what Eric was saying earlier about his key insight on the younger consumers is that they expect to conduct their transactions in real time. So also think about Gen Z. This is the Snapchat generation. This is the generation that text messages back and forth in an instant. This is the generation that thinks a 30-minute TV program is too long. They'd rather just watch a short clip on YouTube. So think about that. What is the average attention span for Gen Z? And you can go ahead and make your vote on the right in WebEx. And we see that the majority of you answered that it is 8 seconds, and that is correct. The average attention span for Gen Z is 8 seconds.
Phil, I wish I had you when I was taking my chemistry test. You've led everybody in the right direction there. Yes, I will tell you, to Phil's point, it's 8 seconds. Gen Z has the average attention span of a gnat. And it's, you know, they have that smartphone, which is an appendage to their hand, and they are constantly looking to get stimulus and close out items very swiftly and move on to the next. And so,
Mark,
go ahead,
Mark,
Eric.
Yeah, I would just piggyback on that. You know, the last slide you showed about the percent being late, you know, 53 to 46% against all other age groups. And again, it's not that they don't have the resources to pay or that they're not willing to pay, but they've not been trained to schedule things for the future, right? So they are, if you get their attention, you're putting a bill in front of them, whether it's electronic or in paper, if you can get a paper bill in front of them, that moment that you have their attention is when they will act and make the payment. And so I think a lot of that percentage being higher is not of their lack of willingness to pay. It's the people that they owe funds to not presenting them with a tool where they can act in real time.
And Eric, I agree with you. I think the tool set is what's really important here, where these folks are very oriented towards digital engagement, and you need to make sure that you can communicate to them in the modality in which they want to interact with you. So you really have to have an omni-channel capability where you can deliver, paper for those who want paper, a web experience, a tablet experience, a mobile experience, text experiences, text payments and delivering communications like reminders or confirmations that, payments have occurred are a great way to be able to minimize the number of non-necessary calls coming into your call center environment.
Agreed.
And that's such good news that it's not that they don't want to pay, that they cannot pay, just a matter of meeting their new preferences. And so, Eric, I wanted to hear more from you about this. How can we meet younger consumers' demand for taking immediate action?
Well, for us at Georgia United, where we settled was that we initially, or not initially, originally, we did not have the ability for a consumer to make their loan payment with us with a debit card from another financial institution. And we believed that was the one enhancement we needed to make that would give them the ability to do real-time payments. So for us, it settled on giving them the ability to use their debit card from another FI in real time.
And that makes complete sense with the money immediately coming out of the member's account and you getting that immediate confirmation that there's funds available. And so along that theme of real time, Marc, can you share with us some of the research about Gen Zs and their need for real time?
Sure, Phil. As we talked a little bit earlier, there's the need for speed with this generation, and when they're conducting transactions, their perception is these are all being done in real time and I've taken care of things. And so here in this particular graph, you see when it comes to disbursements, Gen Z and even older generations like baby boomers think disbursements are taking too long. And there are a lot of technologies that are in Europe, and they're coming here to the United States, and actually have been here probably for the last 2 years or so, that involve immediate payments. And you will start to see more large insurance companies, higher education facilities start to gravitate to some of these techniques where you can deliver real-time disbursements. So, a use case might be a student at a college or university had to prepay his tuition because his grant and aid or his loans had not come through. And now that those have come through and he has a credit balance, and he really needs to get that money or wants that money swiftly so he can settle his accounts elsewhere. So again, to the extent that you can make those immediate disbursements and get them into that person's account, it'll eliminate calls into the call center because their perception of when those disbursements should happen and the reality will be better aligned. Gen Z will also call if things take too long. So again, here you see, very anxious, wanting to, call in, where's my money? There might be, they're more cash flow strapped and really, needing access to those funds. So they can create more calls into your center if you don't have disbursement capabilities that are aligned with their perceived expectation of when they should be getting it. And the biggest payment pain points is speed, and that's at both ends of the generational spectrum. You see it in Gen Z and Gen Y, and you also see it with baby boomers and seniors, that things like speeds of disbursements are big pain points for them, where service fees are a bigger issue for the Gen Xers. Thanks for that research, Marc. And let's also just get some personal experiences. Eric,
can I ask, what are some things you've learned just from observing your kids?
Yeah, so I have 2 children that would be in this age group and that are, going through first jobs, having first incomes, that type of activity, and learning how financial services works with bank accounts and financial institutions. A couple points, and some of it will almost sound redundant, but it's just anecdotal lessons that we learned. But my kids want to be able to pay in real time. The idea of scheduling something to pay a week from now or 2 weeks from now to them makes no sense. There's nothing else in their life that they've ever had to schedule out in the future like that, so that the concept doesn't make much sense. I talked earlier about if you can get a piece of paper in their hands. What was interesting to me when I had children that were for the first time out on their own, they don't check their mail. So if you're mailing things to them, that is not an effective way at all to communicate. I think that also contributes as well to what we were talking about earlier with percentage of payments being late inside this generation. So you've got to talk to them electronically. And I'm also, to a certain degree, I'm seeing email start to get treated the same way as physical mail does. They really want to be talked to more through push notifications. They want to be able to set up kind of alerts that happen. So if the only way you're talking to them is, through an email that's generated and sent out again, they're looking to be communicated with in other ways that will prompt them that action is due. And then, as we touched on earlier, when you do whatever that notification way that you're communicating with them is, the tool needs to be there to make the payment at that time. And they want to be responsible financially. And I think it was mentioned earlier about maybe it's a training issue. I don't know that we've done as good a job as we should have in training kids on how financial services actually work. And so that confusion that was touched on earlier is there, and they're concerned. They get a little scared sometimes as they're doing their first set of whichever financial transaction it is. And because so many of our services aren't real time and everything else they're used to is real time, when they submit something and then have to wait on it to happen, it does cause concern. And as Marc has touched on, they'll want to call out to the retailer or institution they're dealing with. So.
And Marc, what would you add from your experiences?
A lot of Eric's comments. I think again, it's you need to be able to communicate with this generation in the modality in which they want to be communicated with. And I think things like Eric's talking about, the push notifications, the text messages, with a call to action that gets them, to do something, and they can, close out the transactional need, will, earn you high promoter scores or customer satisfaction scores. I'm an older American, and I was, grew up with checks and checkbooks. These guys do not know what a check is. It is a debit card. It is maybe a credit card, but they, for the most part, do not use checks. If they have payments that need to be made, they set them up as auto debits. So again, you have to start thinking and providing services to them that they want to, interact with you with. So that's some of my observations too. My daughter does not know what a check is. She's 22 years old, and everything's the debit card or a credit card.
You're spot on, Marc, and I really think over time this whole concept of the naming of a checking account will probably have to change, because that's the last thing they do with it is write a check.
Yeah, that's super insightful, Eric and Marc. And so let's move on to our third major question we're going to look at around, what do younger consumers really want when it comes to billing and payment? So, Marc, take it away.
Okay. So, can modern payment experiences, can decrease calls, right? What can prevent calls? Well, 76% felt that a secured website with billing information would be a great way for them to interact in an online environment and not have to, get into a call center. Again, they could kind of get in, get their information, get out. Another metric was 63% felt that, a refund to a debit card within 30 minutes would be a great way to handle disbursement-related issues. And again, debit and credit cards, help all ages pay on time. It's not just Gen Z, but you can see, other generations like the Gen Xers, the baby boomers, and even seniors feel that using debit or credit cards can help them make those payments happen on time.
Thank you, Mark. And Eric, on that topic, how did Georgia United Credit Union hear about debit card demand from members?
So the demand would bubble up, through our call center, through our branches, even our team members. Team members that work for the credit union, especially younger team members, when they'd come in, it would be a regular question. So as a credit union, we had all of the traditional methods of making a payment, right? Someone could pay by check, they could pay with a check, they could do auto ACH origination, they would use bill pay at other FIs, which would also regularly cut a check back to us. But that ability to use the debit card from a different FI was just asked. It would come up, and you have to say, no, we don't have that as an option. And so it came up anecdotally from not just our members, but our team members as well.
Yeah, that's interesting, Eric. And Mark, Eric mentioned about how there's demand to pay with a debit card. What other payment options are you seeing that can help satisfy consumer demand and help them to pay on time?
Well, again, Phil, I think we touched on a little earlier things like text notifications, text-to-pay capabilities. Again, these people have busy lives, and to the extent that you can get into them swiftly at a time of their choosing with a notification that can help them make a payment happen very swiftly, and they can be back on to their day, that's a really, really great thing. The other thing I didn't mention, I'll mention it now, Phil and Eric, is a lot of the research that we found on the younger generations. Again, I grew up in an area when, the aggregated billing model was very much in vogue, where, you'd kind of go to your bank, you had the online banking, you'd set up your billers, and you'd pay. But what we're finding with the younger generation is that they're much more prone to what we would refer to as the biller direct model, where they go to the individual merchants, to their websites, and make the payments directly to them. They're not necessarily all that embracing of banks, and that's where other types of organizations like credit unions are maybe felt to be more friendly for younger folks, and they use those or other types of ways of getting at it. This particular slide talks about virtual collection agents as a means to communicate to people really of all generational ages. And, again, in your collection activities, you're limited in terms of what you can do and when you can contact people. But a virtual collection agent enables you to make those types of deals to individuals that you target with the exact same terms that your collectors would, at any hour of the day or night, because you're not really dealing with them directly. They might feel uncomfortable dealing with a person, but they could go through a series of scripts in a virtual collection environment, get an offer, and if that offer works for them, you can get good funds immediately through a debit card to make the collections happen or set up a schedule. So you're seeing here, Gen Xers, the baby boomers, Gen Y, well above 80% of those would find a tool such as that welcoming. And again, we talked earlier about smartphone and smartphone usage. It's not just the Gen Zs, the Gen Ys, and Gen Xers. I mean, 70% of seniors and over 80% of baby boomers are all using smartphones. So again, having those digital delivery capabilities, developing things mobile first, is probably in your interest across all of these generational segments.
Thank you, Mark. And that brings us to our next audience poll. How many text messages does Gen Z get per month? Is it 1,000, 2,000, or 3,000? text messages per month. Again, a couple of hints for you. The strongest muscle in Gen Z's body is in their thumbs. And if you think about just what you see Gen Z typically doing on the subway, in a classroom, at a movie theater, at the dinner table, these are a couple of hints to help you pick the right answer for how many text messages does Gen Z get per month. Is it 1,000, 2,000, or 3,000? And the answers to this will help inform some of our next conversations around digital engagement methods that you can use to help meet Gen Z's need for real-time access to information and payment. And so we see that 81% of people on today's call voted for 3,000 per month, and that is correct. And so, Marc, what research do you have about how Gen Z is influencing even other generations in terms of text messages?
Well, I'll tell you, Phil, that response is even light for my daughter Amelia, who's closer to 8,000 a month in terms of her texting. But that's another issue. Gen Z is influencing all of us. You know, text messaging is the preferred customer service channel of Americans now. But if you're a dad or mom and you have children of that, age, well, maybe not at 4, but maybe, older to the 24, age range, their preferred mode of communication is text messaging. The only time I'm really getting a phone call these days is if, Dad, I need money, or, some other thing that needs to be dealt with in a manner. And even that now, with the advent of Apple Pay and Venmo, is becoming less and less of a challenge, because they can just do the request function there. But again, it's really incredibly more pervasive in everything that we do. They're spending 4 times more texting these days than they are on the phone. The phone conversation is almost a lost art. And then the other thing, which everyone really knows, is the open rate is incredible. 98% of these text messages are opened within 3 minutes. And when you go back further and further and further, you go to email, you go to snail mail, you go to other forms of communication, it takes much longer time for those messages to be disseminated and acted upon than you can with a text message.
Thank you very much, Marc. And so we've looked at the changes in Generation Z and how they're influencing generations of all ages. So let's look now at how executives are responding. So, Eric, how did Georgia United Credit Union respond to member demand?
Sure, Phil. So when we decided that we needed to be able to take a debit card from our members, that they had another financial institution, and give them the ability to do real-time loan payments, we started looking out into the market to find who were providers that could help us with that solution. Not surprisingly, we discovered ACI and went through our due diligence process, really liked the solutions that were provided, and selected to partner with ACI. And in August of last year, went live using the ACI solution in multiple formats that allow, obviously, not just our younger members, but all of our members to make real-time loan payments. It can be in person, so in a branch. If someone's physically in a branch, we can take the payment from a debit card. If they're calling our call center, talking to one of our collections people, we can take a payment with a debit card that way. Where we've seen the biggest pickup, and the one that we're most excited about, is the self-service option, where on our website, in front of the PIN, so this isn't behind online banking, but this is in front of the PIN, so it's very easy to access on our website. Members can come through and make a loan payment with their debit card from another FI, and we have that on our mobile site as well. So we settled, like I said, we quickly settled on ACI as the provider that we wanted to partner with. The rollout plan went well, and we are now 8 or 9 months in and just seeing tremendous results. Thousands and thousands of payments that before would have been either a physical check, cash, a check from a bill pay solution at another FI, has been turned in to an electronic payment, and many of those have been self-service payments by our members.
And Eric, I think that's a great point that offering a new electronic payment channel often brings migration from paper payments. It's not that a lot of ACH payments are shifting to debit card, but that it's really growing the pie of electronic payments. with checks converting to debit card payments. And Marc, I'm sorry, go ahead.
We weren't concerned at all with cannibalizing ACH because I think the members who are willing to go through the online banking solution, do account authorization and set up third-party relationships and do ACH payments, they're still going to migrate to that tool. We really viewed this one to be a replacement for cash and check payments that were being made.
I agree completely. And Marc, let's get your perspective just even more broadly. How are executives responding to the demands for younger consumers?
Well, I think they're all, they understand that the digitization or, putting pieces of strategy together and actually tactics that can help them with digital engagement. It's here. It's coming. Some of the other research, Phil, that you shared with me when I first came to work here at ACI, it basically said people want better customer experiences. They want lower costs to deliver these services, and they want to be able to engage customers more, have additional assets in which they can engage customers. So as you're, planning these types of strategies, think about, what the needs are of your constituent groups, how you can best meet them. Are there products and services out there that you can easily bolt on to what you're currently doing, deliver this omni-channel experience, and you'll see your customer sat and net promoter scores soar.
Thank you, Marc. And Eric, can I ask you, how did you win funding for your project?
Well, for us, when we were first starting the process up, there was some concern about, if we're going to pay interchange for payments that are coming in, is that going to make it economically feasible? But when you really sit down and start breaking down the cost of accepting physical payments, whether that's physical payments coming into your branch through a drop box or a bill pay coming through from another financial institution, the economics for us worked out really well in turning this into a debit card transaction. And there's also the side of it that if that's how, the way we view it, if that's how our members want to pay us, it's our job to figure out how to make that work. They don't need to mold their behavior to fit our, to something that would be the most cost effective for us. We need to supply them the tools to make payments to us the way they want to make them. So when you figure out the cost of manually posting payments, the other thing with real-time payments, why it's a benefit to our member, it's really a benefit to us as well, because you're getting real-time authorization on these payments, so you're not getting returns. If you take many payments by physical check, a certain percentage of those checks are going to be returned, they're going to bounce. Then you have to re-age the loan or do other service features, depending on the type of payment that you received. So we believe that these real-time automatic debit card payments, while there is a cost associated with the transaction, we believe it's offset by removing the manual transactions, takes away the opportunity for human error in the posting of those transactions, and eliminates some costs that we have in our traditional model today. So.
Yeah, and Eric, how did you all think about the PCI compliance risk?
Well, that was a big part of our deciding to partner with ACI so that we wouldn't be holding the transaction and processing it ourselves, right? So ACI provides that protection for us. And so as the credit union, we're not having to maintain that compliance.
And Marc, can I get your perspective? You've worked at TD Bank, Citi, Chase, Sears. When you're at these organizations, how did you get funding for some of your initiatives?
Well, again, I think you have to go do the cost-benefit analysis, and in most instances here, it's cost avoidance. What type of costs are you going to displace? And a lot of it can be, if you're a growing business and you're adding a lot of additional accounts, and you have a certain paradigm that you're currently undertaking, and you would normally look to extrapolate that forward in terms of your costs. If you could then kind of come in and say, well, look, if I change that paradigm and I'm doing something differently now where you know, those calls that I used to get asking me, did my check, you know, post, or, you know, things of that nature. If you can provide other ways to be able to, you know, communicate that out there, that, you know, here's the confirmation number on your online payment as soon as it's, you know, concluded, that, you know, you eliminate those calls coming into your environment, and therefore you don't need to have as many people. You can still have the people that you currently have, but, you know, you can spread those over a larger volume of accounts because you've done, you know, some of this automation to, you know, reduce your cost structure. So I think, you know, you just have to kind of, you know, provide the economic impact as well as, you know, explain how you're enhancing the customer experience. And maybe even if there's additional opportunities for you to communicate with your clients and cross-sell or upsell other products and services that you might have. Again, if you can put a multi-year financial plan in place that can examine, you know, those three dimensions, then you might be able to get the seniors to buy into the capital allocation required, if there is one, to make it happen. Sometimes there's a flexibility with vendors. You should look at them and see if there are operational expense options available to you as well. And then in that regard, you don't have to maybe, you know, go to your senior management with the request for the capital expenditure, because it can just be done as a function of an OpEx with the vendor, and you know, you can move on your very merry way and lower your cost base that way.
Excellent. Thank you very much, Mark. Thank you, Eric. So in summary, we've looked at the question of how can you satisfy younger consumers and do that while actually saving money. And so to prevent late payments, to prevent calls, to make happy consumers, here's some payment methods that you can begin offering, things like virtual collection agents and dispersing funds to you in real time. So what we'd like to do is to give you the chance to keep on learning. So we have our next audience poll question. Do you want to read the research that this discussion has been based upon? Just put in a yes on the right-hand side of the WebEx screen if you'd like, and we'll be happy to email you afterwards the underlying research that we've been discussing. So at this point, what we'd like to do is to go into time of questions. So we'll be getting some questions in all along for Eric and for Mark. So if you've not entered your question yet, go into the WebEx Q&A function and enter your question in there, and we will do our best to answer all the questions today. So we do have our first question in, and this first question actually is for you, Eric. So Eric, the question is, what does this do to fees with everyone wanting to use debit cards as far as the cost to us as a business?
Yeah, so as we touched on earlier, there is a transactional fee with taking a debit card to make a loan payment. The interchange rate on it is not as high as some would think, so that's something I would encourage you to look into. And if it's replacing a payment method that's manual today, then the cost of that manual payment goes away. So now, one fee, I guess you could say that if you want to look at it from perspective that we expect to have less of because of the payment, it would be late fees, right? We think that, you know, giving the ability to do the real-time payment will allow more people to make their payments in a timely manner. And so we will see a reduction in late fees, but that's a fee we would gladly give up in order to meet our members' needs for when and how they want to make their payments. So if the question is from the standpoint of the per transaction fee, what will that do to the economics of it? One, I think you'll find it's less than you're imagining, and every payment that replaces a manual payment is a cost savings. So.
Excellent. Thank you, Eric. So, Mark, our next question is for you. This person writes in, my kids use Venmo, Zelle, and Cash App. What are the chances of that technology being used to pay bills rather than just person-to-person payments?
That's a great question, and that is coming. It is coming in the future that you will have a payment option. Like, let's just think that you go online today, right, and you would see where it comes to the moment of truth and you have to make the payment, and is it Visa, is it MasterCard, American Express, Discover? Those are like the four major brands here in the U.S. You might see a PayPal bug. Now, even in a mobile experience, you'll see an Apple Pay or an Android Pay. Again, all of these newer technologies like the Apple Pay or the Android Pay are really designed to provide, better experiences for customers and secure your documents. I would tend to think that, you will see Zelle and you will see, PayPal's Venmo product and others come into the mix here in the not too distant future. Zelle is getting a lot of traction now. A lot of the major banks here in the U.S. Use Zelle as the backbone for their immediate payments. And to the extent that people on either end of a transaction are connected via Zelle, they can make that real-time payment happen. So it's coming. I would probably say in the next 18 to 24 months, you'll really start seeing traction there for bill payment.
Well, and Mark, I'll share, most of you might know Venmo now will issue you a debit card. So that transition's already being made as well. So consumers are getting a Venmo debit card to spend the money that's on the balance that they've retained in their Venmo account. So they're making the crossover there as well.
That is correct. They're getting out of the virtual space.
And so, Mark, our next question is for you. As mentioned during the presentation, Gen Z prefers to have disbursements back to their account within 30 minutes. What would you suggest is the best way to do this if your school runs the account payable payment process one time per week?
Well, that's a good question. You're not going to get it to in 30 minutes if you're running your accounts payable process once a week. So, again, I think you'd have to, see if there's some sort of system modifications with a third party where maybe you could sweep transactions on a daily basis or in real time through an API call to take those transactions and make the disbursements happen. But, doing it once a week, I don't know if it's the optimal experience, but I don't necessarily think it's a bad one. But, you're somewhat, I think, a slave to your technology. And if you're set up to do it once a week, maybe there could be incremental enhancements. See if you could do it multiple times a week instead of just once.
Thank you very much, Mark. There's a couple of questions that I'll be able to answer. Is the cost for debit card payment less than credit card? Yes, debit cards are typically less expensive than credit cards, though some deals will allow you to bundle your pricing together for one flat price for all card types. There's also a question about understanding why debit cards versus credit cards. So for the loan repayment situation, some card networks do not allow you to pay a loan with a credit card. So that was why the emphasis at Georgia United Credit Union on the debit card payments. However, other types of payments, like insurance, for example, and many other types of payments, the card networks allow both debit card and credit card. So now we have a question. Sorry, go ahead, Eric.
Yeah, I'm just going to add on to that. So we do allow consumers to use a credit card if they want to fund a deposit account. So they're opening a new deposit account and want to, make a deposit open. We can take a credit card over the platform for that. But you're right, we don't take credit cards for loan repayment.
Excellent. Yes, thanks for that clarification.
And Eric is right there. And to Phil's point too, there are rules in the association in terms of the types of payments and how they can be done. But as many of us know, if you have like a cell phone bill, for instance, or an insurance bill, you have an ability to use a credit card to make those payments. They can set them up for, every month they'll automatically bill your card for the current balance.
Excellent. For our next question, I'll start with you, Mark, and then also Eric asks your perspective. The question, since we have approximately 8 seconds to catch their attention with text or emails, are there certain words that grab their attention quicker than others?
That is a good question. I don't necessarily know that I personally have that answer. Phil, you're a marketing guy, so maybe you would have a better handle on that than I personally.
Well, one thing we call the tool at Georgia United Quick Pay. So in the notification where it would be, or if they're on our website and are looking to make a payment, so we've named the tool something that hopefully lets them know this will happen without much effort on their part.
I think that's great. And also the point you mentioned, Eric, about having the ability to take action right in the communication, whether that's replying yes to pay by text, whether that's a link in the text message, or whether that's, a bill attached as a PDF to the email and clicking on that bill to make the payment. There's actionable alerts. So our next question is for you, Eric. So Eric, you mentioned you take debit cards over the phone. Do you record your calls?
Yes, all calls are recorded.
And so, then the follow-up was, how do you handle the PCI compliance for those recorded calls?
Well, everything is secured inside our network. Now, I'm not the technical resource on that, so I could do a follow-up with someone if they wanted.
Okay.
But we don't. Yeah. Go ahead.
Yes, thank you very much. I think that answers the question, and we have our next question.
Hey, Phil?
So, yes.
I might be able to help there, too. There are, while you do have the ability to secure that internally, I know there are some tools out there that you can do to kind of muffle the audio tones to make sure that, nobody is necessarily tapping in and picking up account numbers or, PCI information as a function of that, and therefore kind of freeing your customer service reps from, capturing information or things of that nature. There's a company called Semaphone that has some software that can be put in your call center that can help you in that regard. So that might be a company you might want to look to explore.
Thank you, Mark. And actually, Mark, our next question is for you. With the 8-second attention and Gen Z not wanting to schedule a payment, is there anything in the works with ACI that will allow customers to pay by text and or Apple Pay option towards the invoice they receive?
Well, ACI specifically, we have executed a number of reseller agreements over the past year to help bolster our digital assets. So we've partnered with companies like Solutions by Text, which again, in our environment, your customer can come in, they can say, I would like to get a text reminder notification, and they can pick the number of days prior to the due date. We can send a text message with that notification. It will have the last 4 digits of the account that's going to be, debited. Here's the balance. Here's when it's due. They can confirm that amount. We send them a confirmation email. We do have, things like that. There's another company we've partnered with called Walletron, and again, they're the wallet functionality in your Android or Apple device, where you normally would maybe store your airplane boarding passes or your reward points for your hotel properties. They have a way of delivering a bill into that wallet. And then with a couple of clicks, you can pick what type of payment method you want to use and effect a payment through there. So we are looking to have these types of things available for our customers to help them meet the needs of all generations as they become more digitally engaged.
Thank you very much, Mark. And on that topic of digital engagement, our next question is for you. If students in the future were to pay tuition by Venmo, how would the university identify the student payment? Would they have to be posted to the ERP system manually, or how would the ERP pick up those Venmo payments?
Very good question. Again, I think what we would do is we would work with someone like PayPal, and that would become another payment option within our system. So, the student would, my view would be the student would come in through his college or university. He would log in. There would be a single sign-on handoff to us, and therefore we would have certain identifying information. And then, they could use Venmo as an option, and we could deliver the payment to the university and post it to the ERP system.
Thank you very much, Mark. So we still have a little bit more time for questions. If you have a question that has not been answered yet, go ahead and enter that into the Q&A box in WebEx. And while you're doing that, I just wanted to ask, Eric, what would you say is the number one takeaway for the audience today based on all that we've discussed? What would you say is that one thing you'd suggest the audience keeps in mind?
Well, for me, it would be if you're not currently accepting a debit card as a payment vehicle or a payment channel, that you really should look into it. If it's the economics that is the reason you haven't looked into it, I would encourage to not just look at the transactional costs, but consider the manual processes that you would be replacing and those saved costs, as well as I mentioned, removing the human error opportunity and having to deal with bounced checks or ACH items.
Excellent. Thank you very much, Eric. And Mark, from your perspective, what's the number one takeaway you suggest the audience has for today?
Well, again, for me, it's just, an omni-channel experience, and, digital engagement is coming. It's here. And if you're not with it at the moment, there's still time for you to get there and, get after your current providers and see what type of products and services they have to help you meet the needs of your customers. And if they don't have them, then find someone that does.
Thank you very much, Mark. And this is going to conclude today's session. As a reminder, you'll have a survey that you can take to give us your feedback as soon as the webinar ends. And we will send a recording of today's event to everyone that registered. So thank you very much for spending your time with us today. This concludes our session, and have a wonderful day.